Welcome to part 3 in our educational Medicare series. Today I have Corey Hulstein, CPA of Barber Financial Group, here to discuss your Part B and D IRMAA rate increases. So you'll want to make sure that you tune in and pay attention, because if you find yourself in a higher income bracket, your Part B and your Part D monthly premiums may cost a little bit more than everybody else. If you missed any of our previous videos, you can find a link to those videos in the description below. Corey, thanks for joining me. What we're going to talk about today on this episode is IRMAA when it comes to Medicare. And I'm familiar with IRMAA and the different Medicare monthly premiums. Your IRMAA increase, if you qualify for one, essentially, is going to affect your Part B and your Part D monthly premiums. So IRMAA, when it comes to Medicare, stands for Income-Related Monthly Adjustment Amount. And basically what that does is people who may fall into a higher income bracket, their Part B and their Part D monthly premiums could be affected by those. So for anybody watching, if you check the link in the description, you can download this sheet for the 2022 Part B IRMAA amounts. It's free. Just click on the link and download it. That way you can follow along. But Corey, I'm familiar with Medicare. I know what these monthly premiums can look like. And what I'd like to do is find out from you, a certified CPA, what can you do to help people potentially lower their monthly premiums if they do find themselves in one of the higher income brackets?
Yeah, no, that's a great question, Taylor. Ultimately, from the CPA standpoint, is I'm just here to inform people. So what a lot of people don't understand is in retirement, your income has shifted drastically compared to your working years of life.
And that's because when you stop working and you retire, that active wage income that you're earning, for most people, stops.
That stops, and also the taxability of your income drastically changes. So one thing that's hard for people to understand in retirement is cash flow does not equal taxable income.
Okay.
So one of the big things we look at from the accounting standpoint is where are people's savings located? There's 3 different buckets that we really look at when it comes to retirement planning. Those 3 buckets are what we call non-qualified money, tax-deferred money, and tax-exempt money. So just to break that down a little bit further for you, what that non-qualified bucket is that's your traditional savings account. That could be things like a brokerage account where you're just investing into stocks or bonds or whatever that is. But that is all after-tax money. We can access that cash at a relatively low income tax. That second bucket is the tax-deferred bucket. Traditionally, this is going to be your IRA accounts, your pension accounts, right? This is money that we've saved through our working years, gone through the 401ks or 403bs. And now once we take that money out, we're accessing that cash today. We got a benefit on the front end. That all becomes taxable to us the minute we draw it from that account. The third bucket we've got is traditionally a Roth bucket. That's what we call tax exempt. And what that bucket is we've saved that money and we deferred the benefit at the beginning. So that money's already been taxed and it has grown tax free to the point of today. So essentially we can access those funds, assuming we meet certain parameters, we can access those funds tax-free. Those will not impact our taxable income from the Medicare standpoint, and it also won't impact our taxable income on the return.
So you're saying if somebody may find themselves in one of these higher income brackets, the sooner that they reach out to a CPA like yourself, you may very well be able to strategically put them in a lower monthly premium category by helping them distribute among those 3 buckets.
The biggest thing we can do is have time.
Okay.
Time always adds flexibility. But also if we can spread out our assets between those buckets, that's also going to increase our flexibility when it comes to the Medicare brackets and also the income tax brackets.
So is there like a specific age range? Like when should somebody reach out to a CPA like yourself and start working with you?
That ultimately can depend on whatever situation the person is in. They can be as early as 30 or 40. It can be as old as we've already retired. We'll obviously meet people with where they're at and maximize their situation. But there's really no time frame on when to start. That is limitless.
Okay, cool. All right, so let's take a look at that Part B IRMAA chart. Again, anybody watching at home, you can download from the link in the description. All right, so Corey, what you're telling me is, let's say somebody's approaching retirement, they're getting ready to join Medicare, and they find themselves in the category where they're going to be paying $544.30 per month for their Part B premium. What you're saying is that if that person had started working with a CPA like yourself ahead of time, you may very well have the ability to lower that Part B monthly premium and get them to that standard rate of, when 2022 is $170.10 per month.
Ultimately, we're going to meet people with where they're at and what their situation is going to call for. But ultimately, if we get time on the front end, that's going to help their Medicare situation, because proper planning, we're going to take steps to mitigate those upper tiers as we move further into retirement. One of the things we'd also look at doing is maxing out whatever tier we're in the current year. And we're going to continually do that year over year just to try to soften the blow of those later years of retirement as we see increasing income from required minimum distributions.
Corey, this is really good information. Is there anything else that we should learn about? I mean, you mentioned 3 buckets and the fact that if people get a hold of you ahead of time, you can probably help their situation in retirement. Is there anything else that you can think of?
Taylor, those are going to be the main things. Ultimately, the more time, the more utilization of those buckets, those are going to give us more flexibility, and that's going to maximize their plan for whatever situation they're in. Using a team of CFPs and CPAs like here at Barber Financial Group, and a guy like yourself planning for Medicare, these are all ways that they're also going to increase the probability of success in retirement.
Awesome. Well, thanks for joining me here at Tailor Made Medicare. Corey, really appreciate you coming on today and explaining how a CPA can help in retirement. So check out our other videos. Coming up next, we've got video number 4 in our series going over the 2022 comparison between Medicare Advantage plans and Medicare Supplement plans. We'll have, like I said before, a couple new videos coming out later this year going over the 2023 numbers in Medicare. Thanks again for joining us at Tailor Made Medicare. I'm Taylor Garner with Garner Insurance Agency. If you need to contact me, you can find my information in the description below. Subscribe here to stay tuned, and thanks again for watching.